Not one, but two of the world's largest central banks just resumed cutting rates. A little lower in the pecking order, my home country of Canada has again gone back to cutting interest rates after doing so aggressively earlier in the year. And now the US has joined the rest of the world. But that's not all. Fed Chair Jerome Powell not only signaled the return of cuts, he also laid out the game plan for the rest of the year. Now, the interesting thing here is that inflation in the US is still running hot at 2.9%. So, are they cutting because they want to or because they have to? Now, the moment the news broke, gold rocketed to brand new all time highs before reversing course and actually ending down on the day. So, the question now, will Bitcoin be following gold's recent upward trend, or are we going to crab walk sideways a little bit longer? We're going to find out. We're going to chat a little bit about this today. To make sense of it all, to help us here, of course, we've got the incredible James Lavish. He's co-founder of the Bitcoin Opportunity Fund, and he'll share his takes on this pivotal moment for markets and for Bitcoin. He'll also be joined by, of course, Brandon Gentile. He's the host of his own podcast here on YouTube. He's had incredible guests, including James Lavish just recently, and I highly recommend you go check him out and give him a subscribe. And possibly we may be joined by, of course, the wonderful Gary Leland of BitBlock Boom. More on that in a minute. You opted out of the broken financial system by adopting Bitcoin and taking self-custody of your money. But protecting your wealth is only part of the equation. Now it's time to protect your freedom. My family is stacking sats and stacking flags. A second passport is our hedge against government overreach and uncertainty. If you're a Bitcoiner looking for your exit strategy, our friends at Citizen X will help you secure second citizenship through investment or descent. Book your free call today by hitting the link in the show notes or simply scanning the QR code on the screen. Let me break this down for my fellow Bitcoiners. In just 8 weeks, I've seen a serious shift. More strength, more energy, and fast muscle gains. The reason? FITSCRIPT. They ran 124 biomarkers, blood, hormones, inflammation, and built a fully custom plan, nutrition, training, supplements. No guesswork, no templates. This is functional medicine meets precision fitness for high-performing men who want sovereignty over their health. If you care about optimization the way you care about your money, test, don't guess. Don't trust, verify. Hit the link in the description or scan the QR code on the screen to check out FITSCRIPT and see what's possible. I want to kind of, James, toss it to you a little bit. Just I want to get your thoughts on what is going down in regards to the Fed. So, of course, Jerome Powell chatting today, cutting rates, 25 basis points, but he gave some forward guidance as well. What did he have to say, and what's your interpretation?
Yeah, so I mean, the market came in expecting, if you look at Fed funds futures, market came in expecting a rate cut of 25 basis points today. There were a few outliers who thought maybe they would cut 50 basis points, but I didn't. I mean, I thought that was a very low probability, and it ended up being non-existent. So they did not cut 50 basis points. They cut 25, and so that's what the market expected. So what everybody was hanging on, though, is the words coming out of Powell's mouth, and just was he going to lean a little bit dovish? Is he going to lean a little bit hawkish? Like what's he focused on? And so when he started talking, he was talking about pricing pressures and the dual mandate and making sure they keep inflation in check. And you see the market kind of sold off right away. And then as he kept talking and started answering questions, the market realized that he's focused on unemployment, and for good reason. I mean, we had the jobs numbers have been rolling over. The unemployment number is ticking up. In reality, the job market is definitely softening here. There are fewer job openings. The job participation rate is ticked up, and people are not finding jobs. So that's that's concerning to them. And so what basically he's saying is that they're turning their attention to the unemployment numbers and the unemployment, or the jobs aspect of it, because the Fed has two mandates, a dual mandate. And Brandon, just feel free to interrupt me at any moment. But the dual mandate is stable pricing, which is supposedly 2% inflation, and full employment, which is, there's no measure for full employment. It's just, how does it feel, But he's turned his attention to the employment side, and this tells us two things. It tells us, number one, that they are concerned about 900,000 jobs being revised out of the numbers over the last year going through March. And he addressed it directly, stuff I've talked about before, which is the birth-death model, which is the BLS has a problem. They do these surveys that are lagging, and they're problematic because they don't get everybody to respond to them. They get like 40-something% of respondents now, which tells you that the only ones who are responding are the ones who are doing well. Everybody else is in either ignore or survival mode. And so you're not getting accurate data, number one. And number two, you go back and revise these things and revise them over and over again, and you realize that this birth-death model, which is not birth-death of people, it's birth and death of companies, it's completely out of whack. They're using assumptions that just don't work anymore. And they're using assumptions that were prior, a model that came prior to the pandemic. It just doesn't apply anymore. So they're completely off the reservation there. And he addressed it directly in the press conference today. And he said the birth-death model obviously has its issues. So what he's telling us is that they're concerned about the employment side of the equation, and they're comfortable with the fact that they haven't hit that 2% inflation rate. And that's telling us that they're comfortable with it being well above 2%, close to the 3%. In some measures over with your core stripping out other goods, So that means that he's worried about the big bad word that I lived through. You two are too young to remember it, but I lived through it in the 70s and early 80s. It's something called stagflation. It's absolutely, utterly horrific for the economy. When you have the economy slowing down and prices continue to go up, it's extremely painful for anyone who's in the middle class or lower, and that's what he's concerned about. So, but he thinks that the pricing pressures are kind of under control. He's comfortable with the inflation being around this rate, and he's more concerned with making sure the jobs numbers don't get worse. And there's good reason for that. And I can share a chart with you guys and just show like why it's so concerning for him.
Yeah. Share it over and I'll bring it up.
Yeah. So, but just bringing up, let me bring up this right here. Let's see if we can show this.
There we go.
Yeah. So these are prior releases of inflation. You can see inflation just kind of bottomed out. It's rising again. It bottomed out. It's rising again. And then you've got your jobs numbers are kind of rolling over. Unemployment's ticking up. But this is what he's worried about here. When you get into a period of recession, this is the unemployment rate. You can just see how it spikes up. It completely spikes up, and it happens so fast. And they often miss it. They're too late. And this is the white line is the Fed funds rate. The blue line is the unemployment rate, and these red shaded areas are recessions. And you can see how quickly it happens. It spikes up so rapidly that they're behind the ball. This is COVID, so it's kind of unfair, but that's what they're concerned about. They don't want that to happen again. And so it's up to the middle class and the lower class to suffer the weight of inflation, so that the economy doesn't go into the tank completely. Sorry, but if you don't own assets, you're gonna be hurt, and that's kind of the message here.
Yeah. Now, I do want to, I'll posit this to both of you, but maybe I'll get some input here from Brandon. Where do you feel the Fed's credibility is standing now? They've finally kind of capitulated after being, there's actually some bipartisan agreement, like it's time to cut rates over and over and over again. The rest of the world has been doing it for some time now. And of course, they've just got a barrage of the whole Trump admin just berating them and trying to destroy credibility there. Where do they stand? What does what are we looking at here?
Yeah, I mean, it's funny. I don't know if it was, and this is above my pay grade. This is maybe throwing it back to James almost, but I think it was Jack Muller's the other day was kind of talking about this and the game of, there's different ways to devalue your currency, but also devalue the treasuries and get people to buy them and things of that nature, right? You're kind of arbitraging the system. And one of these ways is really what we're doing with the system now. And like you said, they're cutting rates around the world, but we haven't, right? So it's like, it's the 3D chess, 4D chess that people, the financiers are playing, that it's hard for the average guy to see. And I think that without going into the weeds, because it's, most of us are 80 IQ plebs, financial repression is the game, right? Everything James has laid out, we have to get good at reading between those lines. And I think the Fed is, it's 112 years old. It's, as we all know, it's past its expiry date. And it's just, we're at the end game. We obviously can see civil unrest. We've been seeing it for years, really, right? And clearly it's getting, there's more and more and more. James is famous for talking about the debt spiral or the death doom loop, and that's what we've entered. We started maybe in 2008. I know Larry talks about that all the time. Many people talking about starting in 08, and they're just trying to paper it together somehow. And so again, the credibility is just, really been falling apart for decades. But now I liken it to like if anyone's watched a drain before, or you had like the quarter, the penny that you put in the little thing at the arcade or the science museum, and it's like starts out really slow, and then like when it gets to the drain, obviously it speeds up and it just starts going crazy. Well, that's where we're at. We're like maybe we're in the middle somewhere. Maybe we're getting close to that center point where it's starting to speed up. And James, we had him on the show the other day. We just talked about this, and it was what we had 4 or 5 trillion printed last time during COVID, and it could be 10, 15, 20 trillion. Maybe that's the starting point next time. We have something, the pin that pops the bubble, and have to paper over these things, because you have this economy that's running on just vaporware. So it's, like we just talked about the revisions of the jobs, like this is insanity. I mean, it's political money or currency for the political world that we live in. And it's just hot air. So as James said, own assets. All the roads lead to Bitcoin. The hardest asset is Bitcoin. Therefore you need to own Bitcoin.
Yeah. I mean, the Fed's credibility is kind of shot here. Why is it shot? You heard him say, and I think I heard him say 3 or 4 times, the Fed is working for the American people to make sure that it's taking care of the American people. And it's absolute, utter horseshit. They know that they have manipulated the system psychotically, and it's hurt people in a way that is really actually pretty easy to identify. And the separation of wealth in this country has been dramatic since they started printing money. They threatened to do it back in 1987, or Greenspan. You guys, again, this is Black Monday, where the market crashed on a Monday. And Greenspan came in and said, "We got your back." It shored up the market without them having to print anything, really. And then in 1998, when long-term capital management collapsed, they engineered a bailout for them through Goldman Sachs. So they didn't print again, but they basically said, we're here to protect Wall Street. We're here to protect the market. And then in 2008, they had no choice. They had to print, because otherwise they were just going to allow the entire financial system to collapse. And so, but they created this, and they've created the system of, the financial markets relying on the Fed to backstop them and take on more leverage. So we just continue to do it. And then by the time we got to 2020, it's ballooned out of control. So they're not protecting the American people. And, If you pull my screen back up, Ben, this is it's a pretty simple equation. And if you can see here, let me actually make that bigger, huh? Is that better? You can see here, it's very difficult to see, but this blue line down here, this is the amount of wealth that's shared between the bottom 50% demographic. And this is what it's done. Yeah, it's doubled since 2020. Yippee. Look at what the top 10% wealth has done since the Fed started printing money, really started printing money here in 2008 and 2010. It has just gone up and parabolic here. Okay. And so that's the issue. The separation of wealth has just been dramatic. And that's why you're hearing people frustrated and they're struggling. And then Powell today, he lies. He says the American consumer is doing great. Yeah. Well, that's if you take it holistically, which is this 10% driving the economy and the stock market driving the economy. These guys are not doing so well. And the reason that they're not doing so well is because the share of income it takes, the percentage of their income it takes to sorry, I'm pointing at the wrong screen here. This demographic is not doing well. These guys doing great, gone parabolic. This, yeah, doubled, but the share of income it takes for them to buy the necessary goods, the food, groceries, the gasoline, their rent, they can't buy houses. These people are struggling. So the lower demographic is not doing that great. And you can tell because credit card usage is through the roof. It's at all-time highs, obviously. Well, there's more money in the system. So, of course, dollar-wise. But then you look at delinquencies, 90-day delinquencies on credit cards. And today, they're actually, as of July, they were at 12.3% delinquencies, 90 days. The highest they ever got in the great financial crisis was 13.1%. So tell me how well everybody's doing. It's nonsense. So they just manipulate numbers or the data to make themselves look good. They're not doing that great. We have a major problem. Our problem is the stock market keeps going up and it's driving the economy. These guys are not doing that great. Prices are still rising. Yeah, tariffs have had an impact, and we don't know how much of an impact or echo of that we're going to have, but it's continuing. But you can't let this pop. If you let this demographic, what you do is if you drive the stock market down by removing liquidity by QT or driving up interest rates or keeping your interest rates way high, that pops this part of the economy, which is basically all of it. And we fall into recession, which goes back to this chart. And that's not okay. That's not acceptable. And so that's the problem here. And that's the problem they're facing. They don't want to face that. They don't want to have another spike of unemployment like this, because that will require them to do exactly what Brandon just said: print 10 trillion, 12 trillion, 15 trillion, who knows?
Hey, you. Yes, you watching the Bitcoin price movements and the latest exciting news. It's awesome to stay informed, but the real power of Bitcoin comes from taking control. Don't just watch, take action. Head over to btcsessions.ca/learn for free step-by-step tutorials that guide you through every major skill you need to know, plus full video playlists for deeper dives on any topic you like. And if you're ready for the ultimate fast track, scroll to the bottom and check out bitcoinmentor.io for premium one-on-one experience with my team of Bitcoin experts to ensure you get it right the first time. Don't wait. Secure your Bitcoin future today. Hit the link in the show notes or scan the QR code on the screen.